So Dan, like when someone's facing that and they're looking at our strategy and our team to help them bridge that gap, what are some important questions that they want to make sure they're asking and really clarifying before they make the big move?
Yeah, I mean, first of all, I walked into this deal probably almost 3 years ago. So it's another thing to realize things don't often work on our timeline. We would have loved for that deal to close 3 years ago, and the client would have also, but things come up and we're patient, and sometimes it's hurry up, and then wait, and we finally got across the finish line just recently. And so, I think for the Deferred Sales Trust, just the flexibility, to not be tied up in one single asset, but to be able to exit a business or a piece of real estate and actually take that money and invest it in securities or invest it in a passive REIT with a capital company where now you're still generating that return, but you're out.
Hello everybody, Brett Swarts, Capital Gains Tax Solutions with Dan Palmer and Susan Trujillo. Today we're talking about a recent closed deal story and also the role of stewardship and how it plays in your exit as a business owner and wealth strategy. This particular deal story starts about 20 years ago when this client started a business and had a dream and a vision for building something of value, and now has an opportunity to exit, but is facing huge capital gains taxes out of the state of Pennsylvania, and they're looking at just a big tax bill. And so we were able to talk with them, meet with them, and walk through some of the advantages of using our exit strategy to help them exit and defer taxes. Now, Dan and Susan, they invested most into real estate, but their majority of their wealth was in their business, right? And so this is kind of the dichotomy for a lot of business owners. 80–90% of their wealth is in the business, but they've invested, passively into real estate, sometimes actively, and they're looking at this big exit event, and they really want to get into real estate. So Dan, like when someone's facing that and they're looking at our strategy and our team to help them bridge that gap, what are some important questions that they want to make sure they're asking and really clarifying before they make the big move?
Yeah, I mean, first of all, I walked into this deal probably almost 3 years ago. So it's another thing to realize things don't often work on our timeline. We would have loved for that deal to close 3 years ago, and the client would have also, but things come up and we're patient, and sometimes it's hurry up, and then wait, and we finally got across the finish line just recently. And so, I think for the Deferred Sales Trust, just the flexibility, to not be tied up in one single asset, but to be able to exit a business or a piece of real estate and actually take that money and invest it in securities or invest it in a passive REIT with a capital company where now you're still generating that return, but you're out. It gives you that flexibility and that freedom to manage your wealth and to grow your wealth for your legacy, but without a lot of the restrictions that most people are used to operating under.
Yeah, 100%, right? And that's something to keep in mind, that these sales of businesses or real estate, there's a number of things that are out of control, out of the owner's control, right? Susan, you've helped 1,000+ transactions over all the years as a senior escrow officer before joining Capital Gains Tax Solutions. What are some of the key things you've seen that either stall exits for sellers, and some key considerations to try to speed these things up? Because life is short and you don't want to necessarily wait for 3 years to sell.
You're right. The stalls have to do with just people being unsure of the Deferred Sale Trust, the process, and sometimes their own people will steer them away. But once we get them on board, we've seen that they've moved forward and been really happy with the results here.
Yeah, exactly. So it could be a number of things, right? Sometimes you don't have a clear exit plan. Sometimes you're exploring the exit plan, like for example, with our team, and you're having to, figure that out. I find that you're exactly right, Susan. Like if you don't have clarity on how you're going to basically land this plane that you've been flying for the last 5, 10, 15, 20 years, especially as a business owner or a real estate owner, then it's tough to get out of the sky because you might be still cruising at a good altitude. But there can be some major life changes with health. There can be some major life changes with partnerships. There can be some major life changes with just the journey you're on as an entrepreneur, as a real estate owner, or whatever it is that's your own. And I think the key here is to keep pressing through. It reminds me of another deal with Warren and Catherine in Sacramento when we helped them sell their apartment complex and use our strategy to defer the tax. They also were in this situation where they knew they wanted where they wanted to go, which was more time with their kids, more passive income. It took three escrows, right? So it fell out, if you remember that one, Susan, and then we finally closed it. There was a fire that was out of their control, right? Out of it was almost burning the town down in Placerville, really tough situation. There was an unpermitted unit that they didn't even know that they had until basically the new buyer did escrow or did due diligence. Right. And then finally that second one fell out. And then finally the third one, it hit, and we're really grateful they persevered because the market really shifted at that point. Interest rates went up and they unlocked what they wanted. And so Dan, these things are out of people's control, but one thing they can control is persevering and pushing through. So this recent deal we just closed for the business owner in Pennsylvania, they pressed, kept going, had to get a little creative with the buyer that they had, took a first big tranche to start, and they have a second tranche coming in a year or two. But this unlocks the freedom that they really wanted. And now they get a chance for some passive freedom, passive cash flow versus active ownership in the business. So for these types of clients, and for those who are listening, Dan, what is it? What are some questions or some thoughts that people need to understand, or even just a clear vision of what it's going to be like on the other side once you close? Because you go from being so active and owning and doing all the things yourself to kind of, in a sense, handing over the reins a lot to our team and the group that we build the team with for investing. So walk through what that looks like and feels like for clients that close, Dan.
Yeah, I think that's really the sweet spot for the Deferred Sales Trust. You imagine someone, say they have a $2 million piece of real estate that they're managing, and it creates a certain amount of cash flow, but there's so many variables attached to it. They don't know what the property tax is going to go up. They don't know what insurance is going to go up, or what's going to happen in the world. Like you were talking about the fires that disrupted everything. For a lot of people across the states when we're having all those fires. So you have all these things, maybe a tenant leaves and you can't replace them quickly, and you're losing that revenue. And so they have this incredible piece of property that's worth a lot of money on paper, but it's not necessarily generating income for them. And then you fast forward to hitting the Deferred Sales Trust, and it gets invested passively, and say it was invested at 10%. Now they've got $200,000 a year of truly passive cash flow, where they do nothing and the check just hits. Every month that check hits their account. At the end of 10 years, they look in the trust and that $2 million is still sitting there. It's like the golden goose, laying the golden egg. And so for a lot of our clients who've spent their entire life building incredible things, that's why they have these properties and these businesses that are worth so much. They've worked and worked and worked. And maybe for the first time in their life, they're like, oh my goodness, I can take a breath. I can relax. And the money continues to hit their bank account every month via the Deferred Sales Trust. And so I think that freedom and that flexibility and that relief, the anxiety's gone. The cash flow's there for them to live out their dreams, to visit their kids or their grandkids, to go on that trip they wanted to take, and so that's what I love about our clients, is just seeing that sense of relief, that understanding of, whoa, this passive cash flow is real. I'm kind of out. It's not all on my shoulder. I'm not carrying the weight of the world. And that life that I always dreamt about is there.
Absolutely. We like to say around here that truly passive income is to your freedom and impact, as compounding interest is to your money. Most of us as business owners or entrepreneurs or real estate owners, we understand compounding interest, right? It's the seventh wonder of the world. It helps you get momentum on your side when you have it. If you don't have it, it can be very, very challenging. And so combining that aspect with something on the opposite, which is probably one of the most painful things in the world, at least financially, is paying taxes, right, at a high rate, especially given what's going on in the world these days with governments wasting and abusing and just it really kind of burning our tax dollars out the window in a fire. And so you combine those two things with the really, really negative with the really, really positive and compounding. And if you can unlock it in a way when you exit, it creates this momentum moment, and it can go in your favor, and it can compound in your favor, and that unlocks freedom and impact. So truly passive income is to your freedom and impact as compounding interest is to your money. And so, but you do need to set up. You do need to get things in order. Susan, what are some of the key things if someone's listening and saying, hey, I'm at least interested in learning more? What are some key steps that you want to make sure that you're, if you had a checklist and you're like, okay, here's some key things to start out and make sure you keep aware of?
Yeah, definitely get in a call with us, learn how the Deferred Sale Trust can truly help get your people on board with this, your CPAs, your tax attorney, real estate agents really need to understand the language involved to make sure that the deal closes timely and everyone has been fully disclosed. And then again, meeting with our tax attorneys that are going to put the language together and the trust. Once all that's done, we do all the hand holding there. Once we release it, they get the sigh of relief and move forward with the Deferred Sale Trust and ultimately find out how truly impactful it is to close and to live that life. So, that's what I'm enjoying most is, letting go of the hands and then seeing the results after, getting the call from the client after close, hearing their success stories and really feeling them be so relaxed now after their deal's closed.
Yeah, sometimes it takes 3 months, 6 months, 12 months, because you've been doing the thing you've been doing for a long time, and it is new. It's a new team. It's a new investments. Although if you are an entrepreneur and you want to go back into your own deals, you can partner with the trust to do your own deals. We have lots of we call it purpose-driven entrepreneurs who are still in that wealth accumulation, that wealth building, and they still have that calling to pursue their passions to serve in a new business venture or expand a second business that they've been working on, or invest into real estate and serve Airbnb or build an apartment complex or build luxury homes that they can sell. That is a really neat part about this, like Dan was referring to, flexibility. It doesn't necessarily mean you're completely retired, although you can be retired. We have clients that have, moving from we call it the warrior king and then the sage stage, right? Warrior, you're on the front lines doing all the things. Sage, and then king, it's like you've established and you've kind of conquered that area of the marketplace or your investments.
If I can just add to that, Brett.
Yeah.
Most people like the idea of being retired much more than the reality of being retired, but the ball's in your court. That's the beautiful thing, is the freedom to say, it's up to me now, rather than I have all these responsibilities and bills and I don't have a choice. I have to work. So the idea of being retired is a very sweet idea. The reality often doesn't match up because we need purpose and we need something to get up in the morning for. But the ball's in your court and you have the freedom to determine what you do or don't do. That's really the beauty of the Deferred Sales Trust.
Couldn't agree more. And by the way, some creative ideas that our clients are looking at or exploring is like literally partnering with their kids on the next business venture, where this is a cool thing and a dream where the dad or the mom is like, wow, my kids are now of age, they're out of college or they've had some working experience and they're ready to start this new business venture. What a cool opportunity that the trust can be a joint venture partner to fund this new business dream that they can do together. Right? And or the grandkids, right? Maybe you're even older and you're like, well, can I fund my grandkids' dream to start a business? Yes, you can do that, right? So you're not stuck in a box. And so it doesn't necessarily mean you're taking it on all yourself, and or you have an operating partner who wants to run that multifamily complex for 300 units and do all of that. But you're more the strategic and like to find the deal or negotiate the deal and put it together and provide the funds, right? Through the trust, partnering with that other partner who's going to manage the property on the ground. All of these things are available. So you just realize that it's not something that you're set in stone and you're not set in cement. It's flexible with you and your lifestyle and what you're wanting to do. And again, if you want to learn more about all of this, you can go to capitalgainstaxsolutions.com, capitalgainstaxsolutions.com to get started. We really focus, just so you know, for those who qualify, $1 million net proceeds, $1 million gain is the minimum. It can be Bitcoin, it can be a business, it can be real estate, it can be stock, public or private, it can be a high-end luxury primary home. So to Susan's point, if you're a real estate agent, CPA, financial advisor, M&A advisor, business broker, and you have clients that are facing these large capital gains tax situations, we are here to serve and help and provide options to see if it can be a great fit. Just go to capitalgainstaxsolutions.com. Okay, Dan, what other questions you think someone might have after listening what they've listened so far that we can kind of toss around here or talk a little bit more about?
Just what does that flexibility look like? People are used to kind of the restrictions of the 1031 exchange. If they decide to use this more flexible option, how does that kind of open up avenues for them moving forward?
Yeah, so first thing is asset selection and opportunity to diversify, right? So once the funds are in the trust, like you sold the business, the Bitcoin, the real estate, where let's just say it was 10 million on any of these, okay? And let's just say that represented 80, 90% of your net worth. So the first thing is you're highly concentrated of your net worth in a single asset, a lot of times a single location, right? A single industry of the business, Bitcoin is your singular, right? Now, once you exit, it's in the trust can invest into anything. It can do a combination of all three of those asset types, plus stocks, plus really stocks, bonds, mutual funds, insurance, real estate, business ventures, passive or active. It's super flexible. So that's the first thing of the flexibility is the asset selection to diversify the wealth. The second part of the flexibility is liquidity, right? The ability to be liquid, meaning the trust has liquid investments, which is, trade plus a day or two, to be able to access the capital to go on to the next opportunity or to be able to pay the promissory note back to you, realizing that you are the creditor in the situation. You're the bank, you've lent the money to the trust, and the trust can pay you back. But just having the ability for the trust to have a note amended to be able to pay you out sooner or increase or decrease the payment, and having that flexibility is also a second piece that's really nice, versus if you're in a business or real estate that's considered illiquid, meaning it's going to take 3, 6, 12 months to sell it, right? Like we've been talking about, part of the deal in Pennsylvania that was delayed was the market shifted. Interest rates went really high, and the buyers, quite frankly, got a little bit colder feet and had to really spend some more time and energy and structuring and finding a bank that could finance and do everything. So these are the things that happen, which is out of control, but liquidity on the opposite side means you have more flexibility. So those are just a couple of things that come to mind, Dan, on the flexibility of that. You can also, by the way, go into real estate debt. This is really key. Like real estate, sometimes we think it's all illiquid, but there's funds that are real estate debt funds that sometimes you can get the money out in 30 to 60 days. So I call that semi-liquid, or 30 or 60-day liquid, or 90-day liquid. So it's not all the way liquid, meaning a couple days or a couple years that it's going to sell. It could be in about 30 days. And so if you're somebody thinking like, hey, I'm not really that comfortable with the stock market. I don't want to diversify in the sense of industry. I want to stay in real estate because that's how I made my money. We have a lot of clients like that, and we understand that. That's really how our heart is too. We're very real estate focused. We diversify as well, but we can build real estate investment advisory allocations that are 100% real estate, but are in different segments of real estate that are not tied to just equity positions. They could be debt positions. They could be fund in different funds. It's really up to you. Now, we do like to work with financial planners, and we do like to work with, we have some of the top that we work with, to build a balanced allocation, okay, that's diversified into different asset classes. So those are some of the things that come to mind, Dan. Any other questions or thoughts on that?
I think that was great information for everyone.
Okay. I think we did well today. We're about 20 minutes in. Just a quick overview of what we're doing and how, in a quick deal story. Again, we're here to help you steward your capital when you exit. We do need to set this up before the close of escrow. We also have our best 1031 exit plan, so keep us in mind for that. If you're using a 1031, we can save a 1031. Oh, damn, we recently had one where we couldn't help the client. Right? Quickly talk about that one and some of the mistakes that maybe that client now has learned. Unfortunately, they didn't find us soon enough. Otherwise, we would have taught them.
Yeah, the client, was already in a QI company when they contacted us, and they had a 1031 that failed. And so the QI company said, hey, we're going to deliver this cash to you, and you're going to be taxed on it. And he said, whoa, I want to use the Deferred Sales Trust. And so it came to us, and we said, we would love to help you. Will the QI company transfer your deal to another QI company, or are they willing to work with us? And they weren't. And so he was stuck. So he said, next time I'll go with your QI company that actually has the language already in place to allow you to save that failed 31 exchange by switching to a Deferred Sales Trust. And so that was a painful lesson. Maybe not having all the conversations before closing, before you actually go into that 1031 accommodators, and so that one was too late. But we know the next time he'll talk with us beforehand, and we'll make sure he's 100% set up to move forward.
So some quick tips on this, right? And we're going to be covering this in a future video, like really in detail. Dan's kind of just giving the quick highlights, the cliff notes, but some quick things on this. Any 1031 that you're considering using, contact us, because we have the best 1031 exit plan, and we call it the best because guess what the best one is? The best one is that it doesn't have to fail, and you don't have to get crushed with tax, that you have an alternative to use the Deferred Sales Trust with us that gives you option and leverage to negotiate. We'll dive into all the strategy behind that, but just some quick things to keep in mind. Contact us before you close. Use the best 1031 exit plan, okay? 2 or 3, make sure you're not using, typically these big QI companies, they just don't want you to know about the Deferred Sales Trust, or they don't legally agree with the way that it works. Okay, well, they're not paying the tax.
They're also really big, and they're just inflexible.
They're really big and inflexible.
We're not going to jump through the hoop for you. We're just...
Yeah. We have too many other people that we can work with, and we don't really need your business, is what they're saying, right? And so we're like, okay. So clients, once they learn about this, like, why would you ever go back? Exactly. Why would you get into a plane if we knew that Southwest, for the history of Southwest, will offer parachutes, right? That just in case something goes down, you can all jump out, right? Would you had a choice to choose between Southwest and, let's say, United, right? And United didn't have it, and it's the same cost. Right? Although I think ours is, most, our best 1031 is about $19,997. So versus about $1,000 or $1,500. Just kind of depends on the QI. But it's basically essentially the same cost. Would you ever fly a plane that you didn't have a parachute? Now, hopefully you're not crashing, but still, think about that, right? At least you have a chance, right? If otherwise, you don't. Okay, we'll talk more about that in the next one. We're out of time. Go to capitalgainstaxsolutions.com to get started today on all the things we're talking about. Also, check out the book, Building a Capital Gains Tax Exit Plan. You can find that on Amazon. And it's with Kevin Harrington from Shark Tank and other really smart folks like Tony Robbins, CPA, Don Winters in the book. Really cool, Building a Capital Gains Tax Exit Plan. Find that at capitalgainstaxsolutions.com or on Amazon. Appreciate everyone listening or watching, and we'll talk to you all again soon. Bye now.